Good evening, friends. Hope you all are well and doing fine. I'm Ashok Kanawala. On behalf of HDFC Mutual Fund, extend a warm welcome to all of you. It has always been our endeavor to expand our basket of products offering so that investors can participate in India growth story. In this direction, we are again back in the market with our NFO of HDFC Non-Cyclical Consumer Fund. Now, there are many such offerings in the market, but they are broadly covering consumption as the theme. What is the differentiation in this product? The non-cyclical part of it. And why the non-cyclical part of it? Because generally, when it comes to equities, investors always get nervous about the volatility. There is ups and downs in the market. And when we saw the consumption theme, we thought that it is prudent to exclude the cyclical part of it, in the sense that the sectors and themes that get more influenced by macro parameters like inflation, interest rates, etc., and etc. So that what we get a product after excluding the cyclical part of it is the non-cyclical part that is more stable in outcome, in terms of earnings, in terms of various other parameters. Of course, I'm not here to discuss that in detail because I have with me Mr. Amit Sinha, our Senior Equity Analyst and the fund manager for this product, for this NFO, who will take us through in detail what does he mean or where does he see the opportunity as far as this theme is concerned, and why we feel so much confident about this theme, and where is the opportunity for the investors. Amit has been with us for over last 3 years, but he has more than 15 years of experience as far as equity market is concerned in terms of his research. And he has been doing research on this consumption theme for a while now with us. And therefore, we thought it prudent that he is the best guy to manage this fund also. And of course, with me, my colleague Ram Kumar, Siddharth, who will help me moderate this call once Amit is done with his opening remarks. So without much ado, I invite now Amit to take over and make his opening remark, what he thinks or what he makes out of this offering. Over to you, Amit.
Yeah, thanks a lot, Ashok. Hi, everyone. Good afternoon. Thanks for joining the webinar. We at HDFC, we are pretty bullish about the consumption theme. We believe that the consumption theme in India is at an inflection point, and next few years are going to see an accelerated growth in the overall consumption in India. And the factors basically in the presentation, what we are focusing here are the broad factors, which are basically the pillars of consumption, which will drive the acceleration in growth going forward. To start with, if you look at slide number 2, the first factor which we have discussed is India crossing the per capita income of $2,000. And here, again, the reference point is other countries crossing this mark have seen significant acceleration in consumption in the next few years, including some of our Asian peers like China, Indonesia, and Vietnam. I'll come to some of these points in detail, quickly kind of highlighting the broad 5 factors here. Second is the demographic dividend, and much has been talked about it, but I think the important point to note out here is that despite a very large and young population, the dependency ratio is also coming down, and that is where we believe that that the productivity and the income generating part of the population is actually growing in size, and which is very important for consumption. Third is the change, the dramatic change in income pyramid which is leading to significant premiumization and is creating a lot of new categories which are now becoming relevant. Fourth is formalization. Lot of government reforms and higher digitization has helped the overall formalization theme in India. And lastly, digitization, as we all know, is a very big development, and the kind of penetration which we are seeing in the last few years has really led to a significant improvement in the product and services accessibility across categories. Moving on, slide number 3 is basically it gives you a perspective of consumption, as an overall basket and basically the contribution of consumption to GDP. If you look at the slide and the chart on the left hand side, uh, the private final consumption has grown ahead of nominal GDP, and overall contribution is close to around 59% of private consumption to GDP. On the right hand side, what you can see is the breakdown of the consumption across across the major categories, and also there is a reference point there. Basically the comparison with some of the similar categories in US. The comparison with US is very relevant because US is also a consumption driven economy with all consumption contributing to close to around 68-69% of the GDP there. And some of the categories are close to around 10 to 50 times. Some of the consumption categories in US is 10 to 50 times of what the Indian category size is at this point of time. Moving on to slide number 4, this is one of the most important slide of our presentation. And just very quickly kind of highlighting out here, if you look at slide, chart on the left hand side talks about the per capita comparison of India versus China. We have already crossed $2,000 mark in per capita income, and by 2031 we are expected to cross $5,000 mark. The important point to note out here is the right hand side chart, wherein what we have shown is some of the retail categories in China and how they grew faster compared to the previous period, compared to when they crossed $2,000 mark. So China crossed $2,000 mark in per capita income in 2006, and in the next 6 years, some of the large categories like food, clothing, footwear, etc., they grew 4x in 6 years. I mean, that was the size of growth, and that was the kind of magnanimity of the growth in some of these categories post crossing $2,000 mark, which is underlining the point that a similar kind of acceleration can be expected in India in the next few years. Moving on to the demographic dividend slide number 5. Here again, as highlighted earlier, the important point to note is that India is expected to add 97 million people to working age population in the next 10 years, and dependency ratio has been continuously declining. Another very important point is the urban population, which has been kind of increasing meaningfully, and we all know that higher urbanization leads to higher economic activity, and that in turns is good for income generation and consumption overall. So it's, if you look at all of these parameters, including our young, overall, India being one of the youngest population country in the world and one of the largest population country in the world also, that gives the confidence that the consumption theme is yet to unfold in a big way in India. Moving on to slide number 6. This slide talks about the income pyramid, and this is again one of the important slides in the presentation. If you look at the number of household against 2021 year and compare that with 2031, and that is the expectation, what we see is the top two brackets, the top two groups, which are basically above $10,000 household income mark, that is growing around 2.5 times in the next 10 years. And that is basically telling you the kind of growth which is expected in the upper middle income and the rich income groups, which are largely the consuming class of some of the, or I should say, most of the premium categories and the luxury categories. So I think this is a very important point, and what we are driving home is that the incremental 115 million addition which we are expecting in the next 10 years in these two brackets above $10,000 household income mark is expected to drive premiumization in a very big way. Also, the faster growth of credit cards and consumer finance is something which is helping premiumization in a big way. It's a pictorial. Next slide, which is slide number 7, talks about basically it's a pictorial representation of the changing face of the Indian consumer, and basically the key point is that the number of options have increased across the categories, whether it is food, apparels, footwear, or FMCG categories, or the way in which we kind of shop has dramatically changed across different categories. Moving on to slide number 8. Now, these are the two very successful examples, I should say, for premiumization in India. The first one talks about a leading FMCG player detergent portfolio, and the slide on the right hand side talks about the kind of share gain which we have seen for the premium category within a detergent industry in the last 10-11 years. And the kind of share gain of premium category has been dramatic, I should say, and that is leading to the overall revenue growth of the category for the players and for the industry. Second is again a demonstration of the emulsion paints offering of the leading paint player in the country. And again, here the luxury segment has grown from 25% in FY13 to now close to around 36%, which again underline that the premiumization is driving consumption in a large way. Slide number 9 talks about formalization, and the multiple, important to note out here that multiple reforms from the government has clearly helped here. The pace of acceleration is where we are concentrating, and what we see across categories is that the pace has increased dramatically in the last few years. That is some of the other unorganized share, if you look across the segment, is still pretty high, and we expect this to kind of further drive revenue growth for some of the large and organized players in the industry. The last point is digitization. I think while this is the last, but I think it's one of the most important point. The kind of accessibility which digitization is kind of enabling for products and services is something which is driving a lot of consumption and across the length and breadth of the country. What we are highlighting out here is the number of online shoppers are expected to double from 2020 levels in the next 5 years. Clearly these are being helped by higher penetration of smartphones and cheaper data in the country, and government is also working as an enabler of the digital ecosystem, which has clearly helped the overall digital ecosystem in the country. Uh, so I expect this to be one of the major drivers, and what we have seen is multiple new brands, direct to consumer brands, also kind of now coming to the platforms and becoming big, which was in the past, which was kind of unthinkable, because some of these newer companies were not able to kind of distribute their products, and that used to be a big barrier. So these are the key points we wanted to discuss in terms of in terms of the factors which are kind of enabling the consumption, and why we believe that this is the right time. This is a time where the consumption as a category can see an accelerated pace in the next few years. Moving on here in on slide number 11, we have discussed our non-cyclical consumer theme, and in the fund, what the endeavor is to invest into sub-sectors like FMCG, consumer durables, consumer services, healthcare services, etc. And clearly, as Ashok highlighted at the beginning of the presentation, we have excluded some of the cyclical themes like autos, which is part of India Consumption Index, realty and power, because we believe that their earnings are more cyclical in nature, and we wanted to kind of get a product which has more stability and kind of a secular nature in terms of the earning growth going forward. Moving on to some of the sub-sectors and the sectoral trends and the growth drivers. Now, this is a aggregation. Consumption as a theme is an aggregation of multiple sub-sectors, and it is important to highlight some of the key ones. Starting with consumer staples or FMCG, I think some of the important points, and I'll run very quickly through some of these slides. The important point to highlight out here is that the per capita consumption still remains very low in India in terms of the overall FMCG consumption, and it is a fraction of what our Asian emerging market players have overall. And the point to drive home out here is that even in some of the mainstream categories like toothpaste, shampoo, and detergents, if you look at the penetration of household, they are pretty high. I mean, close to around 90% in some of these categories. But at the same time, the per capita consumption is significantly low, in the range of around 20 to 40% of what the emerging market per capita average is, which drives home that we are while the product has reached home, but in terms of using the premium products and in terms of using more frequently, we are still way behind some of our Asian emerging market peers. Uh, so that is an important point which we wanted to drive. Rural markets obviously have higher growth potential in when we talk about this sector, as the penetrations relatively still low in the rural markets, and the distribution is also yet not fully established. Second, on the slide number 14, another example of premiumization within biscuits. Clearly, cookies have seen meaningful market share gain in the last 10, 12 years, and demonstrating the premiumization journey within the category. And if you look at this chart on the right-hand side, some of the new categories, under-penetrated categories, are growing at a much faster pace, in the last few years. And these categories are expected to grow faster even going forward. Moving to another subsector, which is quick service restaurant. This industry has grown at close to around 24% CAGR, one of the fastest growing industry probably in the country. on the consumption side. However, despite of meaningful growth in the last decade in terms of per capita consumption and in terms of stores per capita population, we are at fraction of some of the other markets, and we expect the growth in this category to continue in the next few decades as well. If you look at some of the key drivers for the growth of the sector are rising disposable income, young demographics, increasing urbanization, and increasing share of the nuclear families. Slide number 16 talks about some of these points. Both the charts are kind of self-explanatory, but yeah, very important charts because these are the key enablers. In terms of number of working women in the services sector that has been consistently increasing, and the urban households has seen the overall size being kind of decreasing significantly of the size of the family. So the important point on slide number 16 is that our out of home food consumption remains pretty low. In terms of the size, we are close to around 1/10 of China, and close to around 1/12 of where the US is. And a part of that is also the kind of culture we have in the country. But I think with all the factors which I discussed, including the higher number of working women and the nuclearization of the family and disposable income kind of increasing significantly, I think this is expected to change dramatically, and the out of home food consumption is expected to grow at a very fast pace. Moving on to another subsector, which is consumer durables. Key point to highlight is the top chart, where some of the key categories in the consumer durables have, if you look at the penetration levels, it is again at a dismal level. At least in some of the categories like AC and washing machine. And important point to highlight is that uh, again, going back to the $2,000 per capita levels, this industry, this subsector, consumer durables, particularly has seen meaningful jump, when it comes to Vietnam and Indonesia. Indonesia crossed $2,000 mark in 2008, and Vietnam crossed in 2014-15. And there was a significant acceleration in consumption of consumer durables in both of these countries. Again, driving the point that country after country has seen that inflection point after crossing the $2,000 mark. So that is point number one. Number two, if you look at from an infrastructure point of view, I think clearly the overall electric infrastructure in the country has improved meaningfully, and that is a key enabler for some of these products to get to see higher penetration, and I think that is happening. And rest of the points, for example, the proliferation of consumer finance, etc., is something which we have discussed, but I applies to this segment as well. Moving on to hospitals, again, the important point to highlight out here, and that is one of the key structural drivers, is the increased life expectancy and the health awareness which we are seeing in the country. That combined with rising insurance penetration and increasing international footfalls, with India having a clear cost advantage and skill set for some of the operatives, is clearly helping drive footfalls in the hospital segment overall. And this is another secular story which we see can be a very strong can see a very strong growth for the next couple of decades. And also, in terms of supply demand scenario in some of the key markets, it is very, very favorable in terms of, the demand being much higher compared to where the supply is. Uh, Moving on, while basically this will be one of the last subsectors which we discuss, which is organized retail, and this is a large sector, subsector. At this point of time, organized retail as a proportion of total retail is close to around 12%, and this is, we are talking about the physical big boxes, retail, the modern retail, and that is expected to go up. The penetration is expected to go up from 12% to close to around 19% by 2030, and we expect a sharp growth in this segment as well. Some of the categories like footwear, apparel, and home improvement, again, the kind of per capita which we see in the country is fraction of some of the other countries, including the emerging countries. Uh, yeah, I mean, while we have not discussed other, some of the other subsectors, but clearly hotels and home improvement, etc., are some of the large themes which come under overall consumption theme. But given the paucity of time, we wanted to keep it short. Uh, uh, on digital consumption, we discussed earlier as well in the presentation, but in this slide, on slide number 20, again, if you look at the right hand side chart, that talks about the kind of acceleration of the adoption in digital consumption across platforms. And here particularly we are talking about the leading online player in food delivery and leading online beauty and personal care retailer. But if you look at across the categories, there has been a rising adoption, and this has clearly led to much superior access of products and services, and is a key enabler for consumption. Moving on, this slide on slide number 21 talks about the kind of confidence which is shown by some of the global and the large Indian companies in of the Indian consumption story overall. And examples are for Apple, which has recently opened the first company-run retail store in India. This is almost 15 years after they opened their first store in China in 2008. Nestle similarly has stepped up the capex program, and are talking about spending around 5,000 crores in the next 3.5 years, compared to 3,400 crore which they spent in aggregate in the last 10 years. This is a clear kind of an acceleration in the capex. Daikin similarly has kind of stepped up on the capex program, and we all know the leading retail player has expanded the retail coverage in the last 5 years by around 3.4 times to around 60 million square feet. Again, kind of showing confidence in the rising consumption story in India. Talking about valuation, the sector is trading at around the valuations which are broadly around average of last 5 years. Some of the key things which I wanted to discuss on the valuation part is that some of the important enablers of higher valuation is one, the earning growth has, in some of the large companies, and in the last 15-20 years, they have surprised on the positive side, across the time frame, and that has been one of the key reasons for the re-rating in the last 10 years. Also, if you look at some of the key characteristic which helps in which help these companies to command a high valuation, is and these are very kind of reflective of their fundamentals. Is one, they have low capital intensity, which in turn kind of leads to higher return on equity and higher dividend payout. This is basically a factor of higher pricing power, also kind of leading to higher margins. Another point, important point, is that most of these companies, they have a strong visibility of earnings, and are, across the business cycles, the volatility is lower, and the disruption due to technological risk, etc., are lower compared to other sectors. Balance sheet is a strength for the sector. Typically lower leverage, and now, typically high on the cash side. The government intervention for most of these companies are lower, and most of these companies are B2C companies. And lastly, again, very low risk from global macros. Most of the companies are inward domestically focused, and risk from some of the global disruption, global macro slowdown, etc., is relatively lower. Slide number 23 again is a comparison between the global players and Indian players in terms of the staple category. And the important point to note out here is that consistently the earnings of the Indian players are higher, and in terms of the PEG ratio, broadly the PEG of both the Indian players and the global players, PEG ratio is broadly the same. Moving on to some of the fund-related facts. The investment strategy outlined in slide number 25 is basically the 80%, which is the core of the portfolio, will be invested in stocks that represent the non-cyclical consumer theme. And again, these industries are consumer goods, which is FMCG, consumer services. Again, this also includes consumer discretionaries and consumer durables. Consumer telecom is also part of it, and healthcare services, media, entertainment, and publications. We will invest across large cap, mid caps, and small caps. And focus will be to invest in companies which are market leaders and gaining market share. And obviously, the focus will be on growth, and we'll also look at some of the turnaround story, especially in terms of the profitability. Moving on, this is a very important slide number 26. This shows the overall universe of the investment horizon across the different set of companies. And what the slide has also reflected is that there are around 300 companies, 309 to be specific, which have higher than 500 crore market cap, and total market cap of these companies are around 20% of India's total market cap. So pretty wide universe to choose from. This is not a small sector, very large sector, which is both reflected in terms of the market cap as well as the contribution to GDP, which we talked about at the beginning of the presentation. And if you look at the classification across large cap, mid cap, and small cap, again, a very healthy kind of representation, 25 large caps, 33 mid cap, and around 250 odd small caps. Very quickly moving on, these are the the universe companies characteristics, and some of this might be repetitive, but very important to highlight that most of these companies have high corporate governance, high return ratios, ROEs and ROCs, stable earnings profiles, and high dividend payout ratio, lower risk and volatility, which is reflected in the stock prices also, and low government intervention. Again, the disruption from technology side is relatively lower. Sticky demand for some of most of these names, as these are lifestyle related products, and lower risk from the global macroeconomic scenarios, as the focus on the domestic market is higher. Slide number 28 talks about, again, the performance of Nifty India consumption across last last 12 years, and 8 out of 12 years, these Nifty India consumption has been in top five sectors and themes, which speaks volume about the outperformance of the sector across last 10, 12 years. Slide number 29. Important data point to note is that in terms of the average rolling returns, the sector has beaten Nifty 50 in terms of TRI consistently, 1, 3, 5, 10 years. It has been kind of a very strong performance by the sector in terms of the average rolling returns. Even in terms of point-to-point compounded, annual growth rate return, the sector has done well over the longer term, and has done better than Nifty 50 over the 10 years and 15 years period. Volatility has been less, which is reflected in standard deviation of the rolling returns, and clearly, the risk return ratio has been much superior compared to Nifty 50. The slide number 30 talks about some of the parameters, again, on the valuation and dividend yield. Important to note that ESG of these companies are better than the bench, basically Nifty 50 overall. Next slide talks about ESG overall and the areas where these companies are focusing on. Slide number 32 is on risk. And clearly, macro is a risk which definitely impacts the category, but to a relatively lower extent. There are some of the demand, as we have discussed in the earlier also in the presentation. Demand is relatively sticky, so macro impacts, but it is relatively lower. For some of these companies, as they have very strong pricing power, and also the basically the government intervention being lower. It's basically the volatility in the demand is relatively lower. Second is on the sharp, basically on the raw material inflation. Again, it has an impact, but the strong pricing power which these companies and some of the larger players in the space have helped them to kind of mitigate these impacts. Private layer labels have been a threat for a very long period of time, but we have not seen much happening on that side. And the kind of brand loyalty which we see in India, I think that does not make a case for private labels overall. And last is competitive intensity going up. While this will always be a threat, as India is a lucrative market in terms of consumption, growth overall. So everybody tries to, every company has an ambition to try to become big in India. But what we have seen that, some of the larger peers, they have very strong moats in terms of, very strong distribution, brand equity, and in-house, R&D, which are difficult to kind of penetrate. Now, coming to slide number 33, this is pretty much the summary slide of what we have discussed in the last 35 minutes. Clearly, point number one is the most important, and the timing of what we see as an accelerated phase of growth in the consumption basket is on account of India crossing $2,000 mark, and this has been seen in other countries as well, and that is what gives us the confidence. Demographic dividend and higher urbanization is something we discussed. Premiumization, because of the income pyramid changing dramatically and shifting in favor of upper middle class and the rich income group, is a very powerful point for the premiumization related story in India. Higher formalization and digitization are the key enablers which we have discussed. These companies have very stable earnings and ROE profile, and low government intervention and some of these points of lower risk of technological disruption and lower risk from global macro, etc., is something which kind of summarizes the quality of some of these companies, and without any doubt, in the last a few years also, some of these companies have been wealth generators, and that is where gives us confidence that uh, especially at this point of time, where when the consumption overall can see an accelerated move, we think of kind of launching this fund and kind of take advantage of that scenario playing out in the next few years. Next slide is data point on the benchmark, and I think we are reaching towards the disclaimer, and that's about the presentation. Thanks, Ashok. Back to you.
Thanks, Amit. It was quite a comprehensive presentation from your side that you covered why we think strongly about this product. In a way, it's very easy to understand this theme. India is really high on consumption, and certain things happen is right happening before us, but probably we don't realize it. For example, recently Apple opened a store in Mumbai and Delhi. In the first month, the revenue was 25 crores, which was very large considering that it's a retail product. And that talks high about India's aspirational population. So while we always boast about that 140 crore, and more important, the key thing which I think is driving this idea about this fund is that uh, that we have recently crossed $2,000 per capita income, and we are likely to reach $5,000 in another, say, 7-8 years. And having met the basic requirement of roti kapda or makan, the incremental growth in per capita is all going towards improving one's lifestyle, one's standard of living, and therefore consumption pattern. So therefore, this story or this product offering or this idea is very simple. We just need to understand how India is transforming itself into a larger economy. Recently, we have become fifth largest. Shortly, by 2030, we'll become third largest. And once you have an economic size which is growing, and at the same time backed by improving per capita income, the natural fallout of that is that your consumption patterns are about to change. We are already seeing that happening right before us. What we used to consume 10 years before, what we're consuming right now. And you classically gave example of those detergent and the paint industry, where we have India is a typical country where you have a soap which is of 10 rupee and one soap which is of 60 rupees. Both have a demand, but only important is that the demand of the high price soaps is improving as compared to low price soaps, and that speaks about this consumption. So yeah, I mean, it was very good to understand this product, and it's not a just to all the people may say it's a thematic offering, but it has more than 300 ideas to choose from, and at the same time it covers 20% market cap of India's total market capitalization. So pretty big thing, pretty broad thing, and therefore the opportunity before us.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.